Hey, hey guys, today is 15th September 2025. I'm gonna talk about my trading strategies and my positions currently opened. Um, yeah, so basically, there's a lot of, there's not a lot of upcoming news. The Federal Reserve on 17th is gonna come up with their interest rate schedule for the euro for the dollar, and basically that impacts the euro dollar and any other pair that's you're trading with respect to the dollar. Um, the I'm expecting the Fed to reduce interest rates by 0.25%, and possibly one more cut, I would say, before December. But the market says that they might reduce uh, 0.25 on 17th and maybe two more cuts by the end of the year. Um, and retailers think that they might reduce zero point 0.5 on 17th and two more cuts before the end of the year. So let's take a look at some data that's out there and the my positions uh, trading with this account that I opened on 5th of May this year with $500. I haven't made many videos of late, but I thought let me just show my positions. It's always good to make a video when you're, in the positive. It looks really good. I try not to over leverage myself. I have blown many accounts in the past. It's it's a learning curve for everyone. If anyone tells you or any guru tells you that, oh, they have never lost money or they're always profitable, that's not utter nonsense. I would say that if we learn management, risk management as we trade, and it's not easy to just start trading today and be profitable forever. So just for the sake of YouTube, I've created this $500 account on 5th of May, and I've created an ultra low account with almost no swap on most of the symbols. And most of these are, if you look at the properties, are micro accounts. So it's you can see here the contract size is just $1,000. So what I do is I trade zero point 0.1 of these lots, zero point 0.1, and sometimes zero point 0.3, zero point 0.5. So I don't over leverage myself. It's quite, you can get greedy and you can go crazy, but I try and open these micro lots so that, when you're doing nothing all day or you've not taken any positions over the past few days, then you get excited and then you start opening like zero point 0.1 or one lot. And then if it's a standard account with standard lots, then you're in trouble, the market, even though you're right, and the market moves slightly against you, or there's some bad news in the market, or there's some war related activities going on, a dollar strengthens and then you get wiped out. So I try to keep my position sizes low. Right now, I am sort of over leveraged, but it's a calculated risk that I've taken. I think I have close to 70 of these micro lots. So it should be good. I should be good. If there's some news in the market, I'll start closing positions even if they are at a loss. So I'll keep a view on what's going on in the market, and basically I want to trade this news that's going to come out on the 17th of this month from the Federal Reserve. So let's take a quick look at my history. I started with $500. Today's profit is 4.34, which is quite a bit for a single day. But yeah, with $500, most professional traders, institutional traders tried and keep a 3% to 4% target in profits. Here I think, crossed 9% per month, which is quite a lot. What that means is I have been over leveraging, but I've done it, I've taken calculated risks. I shouldn't be doing this, but I do get excited just like everyone else. And but they have been calculated risk, I must say so. So even now, I've not kept any stop losses, but I know what I'm going to do. The market might move big time against me, but I'm ready to take a few losses out there. So I'm still bullish euro dollar. Let's see what the market's up to. So let's go to market sentiment. I try to, or let's start with yeah. FX Street. It's a very good website. It's got a lot of information. Let's go to news, Forex news, and it's good to run through most of these things out there. They've got very good information that they aggregate from multiple banks and the markets basically, and you got everything within one website. So, for example, you can take a look at this euro extending post ECB gains. Whenever there's some information coming up or the economic calendar, you can take a look at this and see what the expectations are. Very good resource, very good. You can go by date, you can go by the week, or yeah, past information. Everything's out here. Analysis, uh, forex analysis. You can take a look at, let's say, pound dollar. So everyone's waiting for the Fed decision, as you can see. Non-farm payrolls. That was already on the first Friday of the month. Yeah. So I'm bullish. Let's see what the markets, the retailers are up to. FX Book. This is a very good website as well. So it aggregates retailers, and let's see what they are trading. Euro dollar. I can't believe this. 72% of them are short euro dollar. They're expecting euro dollar to go down, and only 28% is long. They could be right, but I'm a contrarian to retailers, and not just because they are short. That's not no reason for me to go long, but it validates my bullish bias on euro. And you can see here, these guys are average short 1.134. So they are bleeding at the moment, bleeding. I don't know how they're holding on, and most of these traders, for example, trade with $1,000 accounts, and their position sizes can be uh, 3 lots, 4 lots, because they get huge leverages from their brokers, because the brokers, most of them are booking them, and they know they're going to go bust. There's maybe a small percentage of them end up being profitable, but at the end of the day, or in a span of, let's say, 3 months, 6 months, they do go bust. And that's the reality of it. It's sad to say, but that's what really happens. And that's what the reason they give them huge leverages. So all these guys are short. I can't believe this. 72% when the Fed, or I would say Trump at this point, is trying to strong arm the Fed into reducing interest rates. And what happens when the interest rates on the dollar reduces? Dollar gets weaker. So if the dollar gets weaker relative to the euro dollar goes up. So I don't know why these guys are short. 72% is a big margin of these guys. Anyway, so that's another resource that you could use. Trading Economics is another website which has information on anything and everything. One of the really resourceful websites. Another thing that I like to look at is the Federal Reserve itself. Their website has all the information directly from the horse's mouth, as they would say, and where they're getting their information from, their calendars. These are things that you need to look at least once a week. I don't think it really takes more than 5 minutes a day to run through all these websites if you're up to date. So even if you spend 15 minutes a day on all these, it would be great. It would revalidate your positions, or your biases. Another tool that you could use is Trading Stir, where they actually summarize what's happened with the commitment of traders. It's very important to know what the institutional guys are doing. For example, let's see, Euro. Here, I take a look at the non-commercial aspect of this and see what the institutional guys are doing. So they are long, 258,000 long, and they've increased the positions as of last Friday, or the previous Friday, actually. This is almost a week. No, yeah, last Friday. So that's they've increased 2,000 lots in this, and they've reduced their shorts. So this revalidates my thinking as well of being long euro and short dollar. All right. So that's about it. I wanted to keep it short, and I'm gonna wait for some pullbacks and buy some more euro dollar, or if it just keeps going up, I'm gonna look at the next exit, which could be, let's take a look at TradingView. It's a very good tool as well. I'm gonna take a look at euro dollar here when it does open. See the chart for dollar. Yep, is this okay? This is on the hourly. Okay, I got confused for a second. So I'm gonna try, see here, you can see the news that's coming out within this chart. Housing building permits, 17th, 17th, retail sales, Federal Reserve, federal interest rate decision for previous and 4.5, and forecast is 4.25. That means a drop of 0.25. That's what's expected. I still don't understand how these retail traders are um, betting on dollar strength. They should be bearish on the dollar. Anyway, let's see. Maybe they are right. You never know. So I'm going to try and exit some positions at 1.184 based on my pivots, and maybe some more at 1.19, and then try to get back in at maybe 1.18 again. Let's see. And then try and exit all my positions by December 10th, and then wait for some dollar strength and then start all over again. So yeah, leave me some comments if there's something that you would like me to cover, and yeah, or even some comments on my video. That would be great. um, if you didn't like it, mention there what you didn't like about the or my trades or my comments and my trading strategies, and give me some advice.